All right, so let's talk about market maker models. All right, there are also patterns or templates you can use to analyze the Forex market. Okay, if you're able to notice them on the chart, I'll be giving you an example right now, okay? But if you can notice them on the chart, it gives you an idea and also a markup on how you can trade the market from one point to another in a circular way. Meaning you're buying, you're trading it from from the top, from the start of a bearish move to the point where a market shifts or market breaks and starts getting bullish, all right? And then you're trading it back. Okay, actually there are two market maker models. There's a market maker buy model, which is for a bullish move, and there's a market maker sell model, which is for a bearish move. All right, now, so let's talk about market maker buy model. All right, this is the market maker buy model. All right, you need to understand this pattern because it comes up in the chart so many times. Okay, if you cannot find it and identify it, trust me, you're going to trade and be very profitable in the market. Okay, now it starts off by, okay, for a buy model, there are three phases you want to take note of. The three phases you want to take note of are the phase A, as this is a buy model, okay? The phase A, which is here, the phase B, which is here, and the phase C. Okay? The phase A, which is here, the phase B, which is here, and the phase C, which is here. Now, this is A, B, then C. Now, a market maker buy model will start from a consolidation. Now, I want you to take note of this line that I'm going to be drawing. Okay, I'm taking note of that line. That is where the market maker buy model starts, and that is where liquidity lies. That's where liquidity lies. So the market starts with a consolidation up there. Okay, market is trapped within the range, buys and sells, those being accumulated there, and the market goes bearish, market goes lower, drops. Okay, the market drops. When it drops, it forms like a continuation pattern. Okay, as if you want to, it now forms a continuation pattern for it to drop more. Okay, I've talked about continuation pattern in our earlier videos. Okay, a continuation pattern to drop lower. Then when it drops, then it consolidates again, and then it starts getting into a pattern that makes it look as if you want to start getting bullish. Okay, maybe there has been a break in market structure, there's been a shift in market structure. Okay, it's there already, and then once that starts happening, that is the phase. The phase C is where you want to start getting interested in. Okay, once you've seen and identified phase A, B, C. Okay, the C is where you want to start getting interested in, and then you will then see the phase D. Okay, when the market breaks out of that pattern, okay, market breaks out of that region. When market breaks out of that region, it goes bullish for a while. Remember, it's a buy model. Okay, so that is where the bullish momentum will start from. Okay, and that's where you want to start getting to. So once price breaks out of that region, all right, and then retraces. Remember, retracement is different from a reversal, okay? And then the market retraces. Once it retraces, that is where you want to get your entry. All right, that is where the retracement here is where you want to catch. Okay, remember, I've told you how to measure retracement, how to know a healthy retracement. When you do your Fibonacci 2, the 50 to 70% region is a good region for a retracement. And if it breaks that level, maybe it's a reversal. All right, so that is where you want to enter from. It is that level you want to enter from, and then you hold it. When you enter your trade here, okay, you put your stop loss maybe somewhere here. Okay, you're holding the trade. Now, where is your target for this trade now? Your target is the start of the buy model. That line I marked out. Unless that line is taken out, the buy model is not complete. And once it's taken out, it's a complete buy model. Okay, once the market goes from this point, and you hold it within this whole movement. Okay, hold it within this whole movement. Once it has cleared this area, okay, once price has cleared that area, it is now a completely formed market maker buy model. Okay, if you can identify this on your chart, trust me, you'll be making waves, because it's if you can identify it alone, it works. I've backtested this strategy for over months and years of practice. Okay, I actively trade using the market maker models. All right, so let's talk about the sell model. Sell model 2. Okay, there are 3 phases you want to take note of: the phase A, the phase B, the phase C, then the phase D. Okay, and remember the line. Yes. Okay, now the phase A starts with a consolidation. It's the same thing, just inversely. So it is the same thing, it's just turned upside down. Okay, remember, the buy model, a sell model, they are just typically the same thing. All right, now when the consolidation starts, it goes bullish for a while. Then after it goes bullish, it forms a continuation pattern right here. The continuation pattern then gives it another push up. Then it starts forming a bearish pattern. Okay, when it starts forming a bearish pattern, that is where you want to kick in. That's where you want to start getting attached to the chart. Okay, you're getting interested in that part now. All right. Then when it breaks out of that region, like I said, once it breaks out of that region, all right, you want to wait for a healthy retracement. Okay, you want to hold for a healthy retracement. That healthy retracement is where you're going to enter from. Okay, the healthy retracement is phase D. That is where you want to enter from. Okay, you're entering your trade here, you're putting your stop loss here, then you're holding this trade down until it clears the liquidity that lies below the starts of the market maker model, sell model. Okay, unless that liquidity is taken out, it is not yet a complete buy model or a sell model. All right, I'll be explaining further in the advanced class of this Forex mentorship. All right, thank you very much for joining me throughout this video. I really appreciate it.